So as we've seen, there's been quite the downturn in the crypto markets broadly, and certainly in Bitcoin, dating back to actually the peak in November, where Bitcoin actually just barely touched 69,000. And then we saw it dip last night, I think overnight, just below 21,000. Pretty scary times in the Bitcoin space, but actually not something we haven't seen before. This is an asset that went down 94% back in 2011 and came back from the dead. It went down 84 or 85% after the peak in 2013 to the trough of late 2014, early 2015. And then again, went down, I believe, about 85% from 19,700 to around 3,150, if I recall, in December of 2018. Bitcoin has shown a lot of correlation with the NASDAQ Qs and the big tech stocks for the last year and a half or so. And with the Fed raising rates all of this year and expected to continue to raise rates, I think that puts a lot of pressure on Bitcoin being, as it is today, a very nascent sort of early store of value, kind of like an immature gold. It's not surprising at all that, especially when it trades 24/7, and you may be meeting a margin call for some stock trade on Monday and Bitcoin trades on Sunday, you can see downward pressure on it sort of as a leading indicator of what's going on in broader markets as well. I think that the Fed is going to continue to raise rates. I think there are a lot of economic pressures, really from events around the world. I think there's something coming up around October, really as a result of the Russia-Ukraine crisis, where you're going to see that, the second harvest, essentially, that was deprived of fertilizer in so many different tracts of farmland around the world, is going to result in a lot of pressures in a lot of ways, and some particularly scary, that are going to come home to roost in markets around the world later this year. If Bitcoin separates from its high correlation with other risk asset categories, I believe in the long run that Bitcoin, whenever you zoom out, just kind of does its own thing, but it takes, more of like a 4 or 5 or 6 year perspective to see it happening. And then I think you basically see this continued rise of Bitcoin, as I expect it to hit $1 million per coin by the end of the decade. Yeah, I think it would be really hard to argue at this point that these centralized players that are essentially functioning as banks, especially when you see the obvious risk of what just happened with the run on Celsius and them having to freeze all their users' deposits. I mean, clearly that is a bank of sorts, or some kind of financial institution that should be subject to all the same regulations as any other depository institution, and probably much stricter, since they don't actually have FDIC insurance. There's no backstop.